Hey, yo.
I mean, you look amazing.
You got to give me a chance to turn the camera on. Jeez.
You just come in, you proper come in, just camera on.
I don't know, dude. Yeah, there you go. I got to keep my privacy just in case somebody's spying on me.
This pigeon is a CIA spy. It's wearing a tiny high-tech camera.
I have no privacy.
Abrazo. What's up?
What a nice ODB behind you.
ODB, my man Jay Brunson showed up last night. So we live to fight another day. I actually picked that up because when I started kind of my sales journey in BD or business development, that was my reminder that every once in a while you catch a deal that is amazing, right? So it reminds me that you should always try to catch the ball, right?
Cool. Let's get into it. What's up, Dorian?
What's going on?
I'm excited to just hang out with a friend and get into the war stories of the fun title world. Before we get into craziness and business, let's learn about you personally. You grew up, you went to school in New York, and what happened? Walk us through your lifestyle.
Let's see. I am a born and raised New Yorker. I often say I'm a biased New Yorker. I've been here all my life. Grew up here in New York. It was so biased, I didn't really have to think much about where I was going to go to college, so I went to NYU.
Creative.
I know, right? NYU, and I came out of NYU business. I'm going to date myself a little here, but it was at the time where, many companies were really trying to figure out how to use the combination of the PC, which was like a new technology, and the internet, which was, becoming ubiquitous in terms of its availability and its use. So I went into management consultant, lots of traveling, but the point is, I was a trained management consultant, and it's still how I am today. I view everything as not so much a problem, but how do we improve on it? How do we progress on it? I actually don't subscribe to the if it ain't broke, don't fix it. I actually feel that in itself is dated. I always feel that, especially with how technology moves now, there's always a better way of doing it.
You want to make an omelet, you got to break some eggs.
So it's always trying to figure out how to progress, right? To continue the story, I started off as a management consultant, and being in real estate, and then even more specifically, title insurance, was not planned at all. It was through acquisition. The company I was consulting for was acquired by First American Title, right? And they made it a subsidiary of it. So that was my entree or intro into title insurance. I had no idea what it was. I was more of a systems guy. That's essentially what I did. I was a project manager for that subsidiary for nearly a decade, and spent that first half of my career in title insurance in the back office. I had an opportunity to join the front office when the president of the company that I was working for broke off and started his own title insurance agency. I had now the opportunity to not only use my back office experience to help set up certain areas of the business, but now I had an opportunity to really learn, especially here in New York, commercial real estate, institutional, what it was like to be in the front lines of business development, sales, and representing the company. And it's a complete different world, especially for somebody who considered themselves at the time an introvert in the back office, kind of being very technical. And here I am now where, it's everything but being technical. It's being technical with relationships, being technical with, how to add value and all these things that I was now learning, right? I was with that individual who is what I consider one of the pillars in the industry, right? And I had a really good opportunity to learn the sales cycle, or the end user, right? He ended up selling his company to a publicly traded company. So now it was the second time I was part of a sale, roll-up sale, an acquisition by a bigger company. So through personal relationships, I was reached out to by the current company I'm at, right, Cornerstone, to join them, to help build out their commercial practice, to help build out their back office in a more intentional manner. And when I mean intentional is, if there was a road to set this up for a potential sale down the line, what are the things that we should care about? How should we look when we seek out private equity or when we seek out a buyer? Or the other way around, if we were going to really expand, what should we look for in the companies that we buy? How should we even look at them? So I joined Cornerstone in 2018 as a partner. We have now grown the company. We do all real estate in New York and in New Jersey, all types rather, between residential and commercial. So there isn't anything we can't close, is how I say it. You know, through the years, it's been pretty interesting in terms of some of the things I know you want to cover, which are the war stories.
Cool. Before we get into those, let's go over you personally. What do you do for fun to recharge? When you're burned out, what does Dorian do to reload?
This is going to sound counterintuitive, but I can't function properly if I don't take care of myself in the morning by going to the gym and making sure, at least by my standards, at a peak level, right? So again, same thing, always improving, always trying to, you know, find ways to do things better. So my method of recharge is actually to improve myself physically and mentally, right? I think they're both correlated.
Yeah.
And what it has taught me, which is now more intuitive part of saying or giving an answer like that, is it's taught me the recovery side of it. So it's not just the act of working out per se, but it's the importance of the recovery as well. So it's sleep, taking the time to relax and just get in your thoughts for 10 minutes, right, a day. It's getting the movement and the mobility and the flexibility and making sure that's all being addressed. And I think it all kind of seeps into one area, which is, you know, how I perform. And it's not just work, right? It's how I perform as a husband, as a father, as a son, as now the CEO of a company. It affects every part of your life.
100%. Double click on that. I'm the same way. If you could grab a beer with anybody in the history of the planet, who would it be?
That's such a hard question to answer. And I feel like this is going to be somewhat of a cop-out answer, but it is true even before they reach the level of fame that they have more recently. But I would actually say Elon Musk. And the reason why is because nearly 20 years ago, right? I mean, I always likened him to 2008, I think Iron Man came out, which was, you know, the Tony Stark, you know, Robert Downey Jr. thing. And Elon Musk was pretty much the closest thing to Iron Man, you know, short of the flying in a metal suit, but you know what I mean. Even at that time, I was like, I'd like to meet this guy. But even more so now, aside from the antics that we see, you know, in the news and more recently with his involvement in government, but he's so high level. I just want to share beer with him just to see how that mind works, man.
Pretty fast, probably.
That's who I would pick.
Cool. Favorite book?
I mean, how do you answer that? So number one, it's like
Harry Potter.
Unfortunately, it was forced into my mind or as a habit to read, and I've read a lot. So to say favorite book is tough, but I'm going to stay in line with who, you know, your audience is here. So, but, you know, I mentioned business development and how it was a whole new world for me, especially being kind of a technical, process-oriented systems re-engineering guy. You know, in the business development world, it was how do I even get to know people in a way where it's authentic and genuine versus just, hey, you know, give me business. So the first book that really impacted me is Dale Carnegie, right? So I think it's how to win people and influence, or how to influence and win people, whichever the combination is. And at least set the foundation of just the areas that you can now set as a baseline and then extrapolate from. So that would be my favorite book in terms of just recent impact.
The original one, because they released a new version of In the Technological Age. They re-released it.
Yeah, the original one. Original one.
Check out the new one. They re-released it with like the tech world in mind.
Yeah. And then, you know, another book I find super fun, because you said, how do you unwind? Sometimes it's because I feel like I'm always reading, but, you know, it was reading a fiction book. And growing up, and I'm going to guess that we're the same here, but I was really into like vengeance movies. So like Steven Seagal and like Jean-Claude Van Damme, and, you know, just name any action back in the late 80s, early 90s that everybody was into, especially for guys like our age. But recently, I don't know if you heard of an author named Jack Carr. He wrote a book called The Terminal List, which they made a Amazon Prime TV show about, and it's literally vengeance, like series movie, and it's pretty intense in terms of just the level of violence that they describe in the book. Not that I'm a violent person, but it pretty much describes an ex-Navy SEAL who is given a reason to be vengeful.
Cool. Okay, last fun question. If you weren't living in New York City, where were you living?
I've been living in Florida with you.
All the way down here in Miami, or were you being Central Florida, the West Coast? Where were you being?
Interesting question for me, because I said earlier, I'm born and raised in New York, and I've been here my whole life, and I'm like a biased New Yorker. But I do feel like in planning for a day where, you know, what's my ideal situation, like it would be to find other places to live for, you know, 3 or 4 months out of the year, and then, you know, have New York as my base, or some variety of that. This is going to sound somewhat short-sighted, because maybe I haven't explored enough of the world, right? Because I feel like there is areas in the world in Europe that I probably would end up, but because I don't know it well enough, it would actually be Florida. I have family there in Tampa, and I have family there in Miami. And then you hear about here in New York that Miami especially is just, it's considered the sixth borough. So you figure that's a normal, easy transition to start the exploration, but that's the answer on the top of my head right now.
Cool. So let's get into the business world. So let's look at Cornerstone. So we all learn with you. Like, walk us through the 100,000 foot view. You did some talking about it, but like, are you guys only specializing in New York, New Jersey? What other markets do you cover? Walk us through just the high level of Cornerstone.
We used to do the majority of the states in the country, but we pulled that back, I would say now about 6 years ago. It was really in the ethos of just being the best at something. At that point in time, decided we were going to be the best in New York and New Jersey. I say with confidence that we are the best in New York and New Jersey now, right? Especially when it comes to, closing on real estate, providing title insurance, and giving and explaining to people the reason why they need it. And that's an important aspect. Through the years, it's been a B2B world, and it still remains that way. But the end user, which is you in the case when you were, buying real estate, or even when you buy a home, you're the end user. Was just very odd to me that oftentimes I would ask, who did you use, or who's your policy issued by? And generally the answer is, what's title insurance? Like, I have it.
And why is it so expensive?
I didn't even realize I had it. Like, do I have it? And I'm like, yeah, you definitely have it if you bought property, right? Or if you got a loan. You 100% got it if you got a loan. It became something that we used as really one of our sticking points in terms of sticking out, which is how do we brand to the everyday user, and how do we market and target them from the perspective of explaining to them even what it is in a compelling way. So I'll give you just a really quick example on that, right?
Bring it. We want to learn.
How often have you been told, who do you use for title insurance? And first, it's what's title insurance. Second, I just joked about how many people don't even know that they have it. Even became just how you describe it, right? What it helped us realize is what we sell is title insurance, but what we do is actually close on real estate, right? We're actually the core or hub, or however you want to put it, at the closing table. Just from that perspective, when you start describing what we do as, oh, we do real estate closings and we sell title insurance, it just immediately connects with people much more easier and much more quicker. So now it's Alex is about to buy something, he should use you to close it, versus Alex is about to buy something, I don't even think he needs title insurance, but you take it from there. It's helped shape Cornerstone for, how it is today. And we do that in New York and New Jersey, and we feel we're the best at it.
Where do you want to grow from here?
The growth from here, not so much geographic. At some point it will be, right? Right now it's more, look, New York's a big state. New Jersey's a big state.
It's not that, well, New Jersey's not big, but it has a lot of people. New York is dense in a couple areas, but it's a lot of people.
Yeah, we still have a lot more to accomplish in that fashion. I'm in the 5 boroughs of New York City, and that's where most of the population is. And I feel we are pretty well known there, but we want to really be known throughout the entire state, no matter where you are. And that applies to Jersey too, right? So that to us would be the expansion, because our impact is more greatly in New York now than it is in New Jersey.
Cool. And then who's your core customer? Like, is it developers, lenders? Who's the main character for you guys?
No matter what I talk about in terms of just how you market and how you view a title company, at the end of the day, B2B is still the way, generate the most revenue, and they're the biggest clients that we have. So, in that space, we have become known as a developer's title company. So developers love us. We work with a lot of them here. And, typically it's developers, owners, operators, guys who are buying commercial real estate, and real estate attorneys who are, generally the first line of advisor for for that group of people.
What do you think your superpower is? You as a company, like, what is Cornerstone the best at?
The superpower, we know who we are, right? And that superpower is, if I were to define it in a phrase, it's we'll figure it out, right? The superpower is the ability to figure things out. So I have 5 lawyers in my company out of 23 employees. I have 5 lawyers, and then we write through 9 different underwriters. So that combination, there isn't anything that I'm confident to say we haven't seen. And if we haven't, that we would be able to provide a solution around it. Or, in the worst case scenario, we just tell you this is a real problem. Like, you may not want to step through this.
Cool. So I learned as a business model, how do title companies make money? Is it always on the transaction? How are you guys incentivized?
We're directly tied to transactions. So it's specifically closings. So we measure our success through closings. In the 17 years we've been in business, we're at nearly 17,000 closings. So that's almost 1,000 closings a year. So that is where title companies make their money.
So now looking at the title insurance and title closing world, and I want to lay out a caveat, which is how much I hate title insurance.
You're not the only one. Get in line.
My pain was when I was buying lots of apartments, and every time we bought and then we refi, we had to eat the cost all over again for our own properties and searches and all that. When we were the previous owner, it was very painful on big dollars, right? So I'm going to start with that. You know how much I hate it. So just start at the super highest level. Like, no, why do we need a title insurance company? What do we need title company? And then what do we need title insurance? Just super broad strokes for someone doing it for the first time.
People most resonate with this example. It's to make sure that whatever you're buying doesn't come with anything that shouldn't be yours from the perspective of any lien or encumbrance. And furthermore, that whoever's selling it to you actually owns it free and clear of any mortgages or any title claims. Right? Or claims to title rather, right? So that's the broad stroke. But, if I were to really explain it to you as a commercial investor that, you were, it's that whatever you get into, especially if it's a big portfolio or development maybe that you're buying, you want to make sure that there aren't any liens that are against the property that could carry over to you. And that presents a big problem because if you say in the case of a development, buy it and you didn't discover the fact that there was liens on it, and you could ask the developer, like, do you have any liens? Oh, no, there's no liens.
Never.
Even if it's being kind of sneaky from the business perspective, there are times where the actual developer themselves isn't aware of it yet. And what I mean by that is they could call their GC and say, do you have any liens? Has any liens been filed on our project? They could say no. It could be a sub. It could be the sub. It takes time for this stuff. It's not like, and these are areas of improvement technologically, and that's a separate discussion altogether. But the way it's structured now is that there's county clerks. It takes time for it to get on record. And there is this level of you may not know. So it could come from an honest perspective where, there's no liens. So we're hired to make sure that there isn't anything pending, right? So it's the search of the records. It's making sure that everything has been addressed, that is, on record. It's making sure that there isn't anybody that's going to knock on your door after you take ownership of it and says you owe me money.
When should someone involve you guys? Like, is it before they start thinking about selling or buying? Is it once something's on a contract? What's the best time to bring you guys on board?
I'm going to answer that next, but I do want to address the pain point that you mentioned, which is I refinanced my property. I'm the owner. Like, why am I paying for the title insurance again? The technical, which nobody cares about, but it's worth knowing. And so to that is that, every lender is going to require a loan policy, just as, part of their compliance and checking everything off, especially when they securitize that loan or when they sell it in the second market, right?
CYA, cover your ass.
So that's the technical answer, but that's something that doesn't resonate with guys like you and I, because all right, fine.
Yeah.
The real reason though is that example I just gave you. So if you're the developer now, you actually may not know if there's liens coming your way. And it's the bank's way of making sure that everyone's on the same page with regards to, what's coming and what's impending. Unfortunately, it is a necessary evil. And I get this call a lot. Like, I've owned it for 25 years. I know what's going on. 100% of the time, there's something that comes up that somebody wasn't aware of, between violations and permits that weren't closed out and even liens that weren't actually resolved on public record. You could have resolved it. You have all the paperwork. I got it right here. It's like, well, all right, public record show that. So you may want to put that on now so that, you're clear and you're good. So the reason that more correlates to the front lines of it, like you and I, is that it helps you check. It's like the rearview mirror. It helps you just make sure that everything behind you is, moving according to plan.
So something that we're experiencing is lots of HUD loans against properties or things that came out through COVID. Are you guys seeing anything in the recent couple of years that you didn't see before that is popping up on title a lot more that we can learn from?
That's a really interesting question. Anything new that has come out?
Or it's not going to be new, or something that's popping up a lot more now that wasn't popping up 5 years ago or 10 years ago.
I don't want to go as far as to say that this has never popped up, because, one thing that often many of us take for granted is that we have been in a really good real estate, cycle for many years, right? So
12 years at this point.
12 to 13 years of the interest rates that everybody loved. And although that's almost 2-3 years removed now, but still, my answer to that question that I'm seeing that I haven't seen before is just because we're on the downside of the cycle now, right? So guys who either over leveraged or overvalued and borrowed against that, the structure of deals more so than title itself. But I have to get involved because I have to check off on the structure of some of these deals to get to the point. It's something called deed and escrow. Many people are familiar with deed and lieu, but this is deed and escrow, where a developer actually has failed to perform, has tried every avenue, has extended, he's done. Like, he's at the end of the road. And the lender essentially has them sign a deed without an actual buyer. Like, I've given it up and they put it in escrow, and then somebody finds a buyer and everything's kind of prepackaged already, where it makes it quicker to assume the development because it's incomplete development, remember. So more so aside from the normal stuff underwater, the dynamic of just the structure of deals, especially development, where people reach a point where they can't finish it because they don't have the wherewithal to do it, right? But I promised I was going to answer the other question you said, which is what's the typical time to get a title company involved? So traditionally, the mistake has been that oftentimes you wait for a term sheet in the case of a refinance, or in the case of an acquisition, a contract to be signed where we're engaged. But, I had mentioned before, we have become a developer's title company, and many liken us to a developer's title company because it should actually be before. We promote very hard that you should be engaging me the minute, in the case of an acquisition, you're even looking at a property, right? And in the case of a refinance, a little before that, right? So that you start getting your ducks in a row before it's too late. And it's the stuff we're going to, eventually dive into with regards to the things and lessons that we've learned through the years. But oftentimes it's because we were engaged too late, and then either closing gets delayed and we get blamed for it, or in the most egregious cases, people walk away from a deal, right? And now you've wasted your pursuit costs, your due diligence costs, and everything involved with it, right?
Thanks for that. So thinking about the difference between, I come originally from multifamily structure finance, and now I'm in single family world. How do you guys look at those differently? Is it single family world a lot simpler, or do they have the same kind of check boxes and tasks and workflows and all that? How do you guys look at the two differently?
They're very similar, right? There's not much difference, honestly. In some cases, it's something similar to probably what you've heard in the mortgage world, where, not that I liken it to brain damage, but just because it's such a widely used term, that it's the same amount of brain damage, and the fees are different. It's very similar. And between single family and multifamily, it's just obviously on the multifamily side, the mortgage amounts or the acquisition amounts are going to be bigger. And then the single family side, not that the amounts can't be bigger, but in the cases that they are, it's just there's a lot of different properties that you have to underwrite now from a title perspective, right? So you got one big building. I'm just underwriting one big building and I'm making this number up, but $10 million. In the single family, for that same 10 million, it's 10 houses. I'm underwriting 10 different houses, right? So it's a lot more work. It's not so much that it's a different workflow. It's just that the workflow iterates based on the amount of properties, or the terminology is lots, that are involved in the actual acquisition itself.
And then in the case of technology, any cool tech that we should be learning about? I know blockchain was the end be all to have everything open to the world for title, and then AI is kicking off and going pretty strong right now. Anything that you found cool that you guys are using that everybody should know about that's really helpful today?
Yeah, I mean, look, blockchain, I remember famously probably 10 years ago now, I can't believe I'm even saying that, but somebody's like, you're done. Blockchain's going to replace you. And I mean, obviously hasn't, but I've spoken on many panels about this. That's separate discussion. Look, blockchain, to me, that's just more of an efficiency gain versus a disruptor that everybody wanted it to be. So I'm not going to answer that question by saying blockchain is the cool technology. It is obviously a cool technology, but there's not really, for this conversation, there's just a lot of barriers that it has to get through. Not from the technological standpoint, from the adoption standpoint.
Yep.
AI, I feel at this point, if you're not using it, you're behind already.
For sure.
Everybody should be using AI. And that to me is more of a better candidate to being a disruptor in my industry versus, blockchain. It's such a loaded question, but what I would say is that everybody should be using AI at this point in gaining some level of efficiency.
Anything specific that you guys have found like an aha moment, or any specific AI?
Any specific AI? No, I mean, we haven't gravitated towards a specific platform, if that's the question. But, is there a revelation? The revelation is more in, and this is where I had mentioned I'm a trained consultant, right? So it's just, I'm always looking for efficiency. So I can answer that question in many different ways, but just for the audience, right? Because I know that you're talking to entrepreneurs and founders, is that anything that's a repetitive task, you should really try hard to replace through AI.
All right, so now let's talk about like the entrepreneurial journey, the things that no one talked about. If you were if we freeze time, you go back X amount of years when you're scaling Cornerstone, what do you do differently? What was so painful? You're like, I got my ass kicked. I would have done that differently. What does that look like?
So it's, founding the company because you're looking to, eventually anybody who's successful wants to scale the company, right? So I'm already answering my own question here. But if you're just founding the company just to, whatever it is, make money or give yourself a job, right? That's a lot less important with regards to the feedback I'm about to give. This is really if you want to get to a level where you could very easily scale it, or that you can at least begin to package it in a way where you get fuel to the fire, right? Via investments from others or private equity, stuff right? The stuff that at least nobody told me is that you should really have a focus on structure, right? What I mean by that is, everybody falls into the mistake of, in the case where, let's just say there's 3 founders or two founders that there's decisions that are made because fires happen every day, and there isn't an actual process of making sure that it's followed by all, that it's applied throughout the company, that it's memorialized, and that people know to do or react in that way the next time that it happens. It's more of you become very reactive, and everything is reactive.
Things fast.
Like it's literally what's here today, what's here today, what's here today, and you reach this level of like, oh my god, it's just so much, right? But if you really focus on the structure, so all right, Alex, these are your areas, Dorian, these are your areas. It's almost the whole divide and conquer thing. Obviously we're founders together because we have some level of trust that we decided to do this together. We don't have to solve every problem together, right? We know what our mission is at that point in time. We know where we want to go. Now build it, right? And then the key is putting the right structure in place so that you can do that and then huddle or meet or always calibrate on where you are. So that's the other mistake. Even when you make and put the structure in place and it's like, all right, Alex, you're in charge of growth. And Dorian, you're in charge of
execution or anything like that.
Right. It's all right. You go out and you build the team in the way that you feel we agree to. And I go out and I build the team. And then at some point you realize, because you haven't met, it's like fully trusted, like he's going to do it. Don't worry. And you all of a sudden realize that you're going in complete different directions, right? It's so much, nobody tells you that. Everybody always tells you it's like the whole key to making a successful business is by getting revenue, right? And it's like, oh, how much revenue do you have? Or, you know, how are you getting more revenue? Or, you know, oh, do you have small clients, a big client? Those are all important, but it ends up getting you in a situation where you're just chasing your tail, right? So this kind of, my eyes were open when somebody said to me, all right, I got $1 million. I'm going to give it to you now. What are you doing with your company, right? And you should be able to immediately answer that question, right? It's, oh, I'm going to bring in 5 business developers, or I'm going to bring in the 2 attorneys that I've been talking to that I can't afford, or, you know, I'm going to create a strategic partnership. Like if somebody takes pause with that, you haven't set up the proper structure to give you the time to actually answer that question. That's the best way for me to put it.
Cool. Thinking back of moving from your management consultant days to now entrepreneur world, what's the biggest thing that shocked you? What's the biggest difference you've seen?
What's the biggest thing that shocked me, especially in my industry, is when I got to the front office, it was amazing to me. And it could have been timing. There's stories behind that as well, good and bad. But how little the emphasis was on the actual product itself versus the relationship, sometimes right and sometimes not. And to be more to the point, it was meeting people who frankly didn't care about what it was that you were selling them. It was just the amount of fun or the amount of access or the amount of whatever it is, fill in the blank, that you could get them, right? And the revelation became how different that is from where I came from. And it forced me to change in a way where I took what was in my background and adopted it in a way so that you can build the relationships and, you know, do what you need to do as someone being in charge of bringing in business and growth.
What do you think, if you were a third party, right, looking in at title companies, what do you think the biggest mistake is that title companies do as they grow, like as they scale? What's the biggest thing to screw up?
The biggest thing that the companies screw up as they scale, they grow too fast, which is that's no secret, right? I mean, you could say that about any company, but what it means for us specifically is I have seen it where you go from a place of, say, all right, we're in New York now, let's sell title insurance in every other state and let's get licensed and open an office in every other state, and that is not actually driven by business that you already have or a reason other than to just say, I can do insurance in Oklahoma. And the biggest mistake is you spend so much time and, you know, financial resources to do it, and then you don't actually have the client in hand. So I believe if you're going to do it, that the growth should be driven by your customer or whomever it is that's helping you drive that growth. So if you called me, say, Alex, and said, I'm going to buy up the entire state of South Carolina, or maybe somewhere with a better premium state, but you know the example, then that gives me a reason to actually send boots to the ground and, you know, set up shop.
Love it. Talk about war stories, which is by far the only thing I want to hear. My favorite lessons, right? I learned so much from war stories compared to the unicorn stories. You know, walk us through crazy lessons, things that you learned a lot from. Like, just walk us through what happens in title, you know, at a closing table at the last moment that blows up a deal or doesn't blow up a deal. Hit us.
Yeah, I feel like one day, Alex, because you're triggering this thought in my mind where there should be a TV show of like closings, because I think that entertainment factor in in it alone is worth it, because people love drama. And oh God, I mean, is our industry wrought with people who bring drama to the table, right?
But if you haven't gone through a crazy closing, you're not doing it right. Like if funding doesn't go nuts at the end, if security deposits can't change, if something crazy hasn't happened in the last second, you haven't done this, because it's always craziness, or you have the wrong escrow amount, or there's always something wrong right at the end, right? So hit us with your best war stories.
I feel like oftentimes when we're asked what is your cutoff time with your lender or your bank, I feel like that question's not asked because they want to be as far in front of it as possible. I feel like at times that question's asked so they know how close they can get to it. So settlement statements, it's if our cutoff time was 6 o'clock and we say it's 6 o'clock, the settlement statement doesn't get signed till like 5:55. I've got like 20 wires to set out. Everybody's like, did you send it out? Did you send it out? Like, why I don't see the funds. And it's like, you literally gave me the signed settlement statement 5 minutes ago, right? You're right. That's just the easiest version of drama. There's so much more. But the question you asked, right? It's something I more recently reflected on, which is, what are the things that we've learned through the years? And again, right? I mentioned we do like 1,000 closings a year, and when it's a good year, and when you have that many, you're talking, what, if we worked weekends, pretty much almost 3 a day, right? So there's always some level of, fire that we're looking to put out. I had mentioned to you taking a step back, taking 10 minutes to just kind of reflect on things. And when I started doing that, it gave me the opportunity to reflect on what we've learned at closings and what we could do with it, right? To be to the point. And as you know, I wrote a book called Start with the Close in Mind. And the impetus or the root or the driver of that was just what we saw at closing tables. And what I found amazing was many times we would be sitting at closing tables and deals would either get delayed or, knocked to the side, or knocked completely off track, or just in some cases just completely blew up. That, it was based off of reasons that they should have known much, much earlier. And there's just this assumption that everybody's honestly telling you the truth and giving you everything, right? Between the brokers that are involved, the seller, the parties, or the attorneys and all that. And, so I'm going to get straight to the war story because I know you want to hear them, right? But there's a development, and it's a beautiful development here in New York. I'm going to be as vague as possible because I don't want to get in trouble.
We don't need everything. We just need broad strokes.
But it's you're sitting at a closing and they're getting a construction loan. The whole building's rendered. They're ready to go. Obviously, we're teeing up for closing. So we're here sitting at the closing, and it's, there's a covenant of restriction in a deed from, 1901 that says you can only build religious facility or community facility. So how are you getting around that? Everybody just looks at each other and it's like, what do you mean? We're just going to build it. And the lender's like, I don't think we're going to lend if you're just going to build it because there could be an issue. You're building multifamily. It's not religious facility or community development or a community facility, right? And think about that. Think about, you've been through that.
The amount of work that goes
the design, all the stuff that you just now put into it, the time that you spent, all of it. And it's, let's say 6-7 months in, and now you're discovering there's a covenant restriction, right? So that obviously throws everything awry from the perspective of delaying everything. Now you got to figure out who is technically the executor of that covenant restriction, or whoever's in charge that can terminate or help you get around it. And when I say get around, I mean actually file on public record that, that covenant restriction no longer stands, or some curative measure from the perspective of how do you paper it up to the point where the bank is satisfied with the risk that it's exposed to in the developer as well. It's going to delay the process. And then when you have a moment where we had a year where interest rates nearly tripled, it's on construction loans easily doubled.
Yeah, for sure.
You can understand how time can affect that, because you get to a point where it's like, I can't even do this anymore, right? Even if you solved whatever it was that was the issue. And it amazed me that something as simple as just search of the city records could have saved all that, right? So that's one example. In the same fashion, smaller deal, not a development. It's something I've written about before, but it's a $10 million purchase. Everybody's ready to go. And about 2 weeks before the closing, we run our water bill and it's $1 million. And it's $1 million water bill on a $10 million deal, right? And obviously everybody's like, it has to be an error. So it completely delays everything, because now the seller's like, I have $1 million water bill? Like, what are you talking about? And, it's a whole story behind that, but it turns out somebody was tapped into their line and it was just all this. The point is it delayed the closing by months. right? Not even days or weeks, months. And it's one of those obvious things where you could literally call me tomorrow, Alex, if you're looking at a site in New York and say, what's the water bill? And I could literally give it to you before we hang up within 5 to 10 minutes. Like, it's that simple versus going through the whole process of looking for a property, going through the bid process, getting an attorney, negotiating the contract, so on and so forth. It's something you could have known very early and could have worked on much earlier than later.
Any success stories of solutions you guys come up with that, something was going to die, a deal was going to die, and you guys pulled a rabbit out of nowhere and came up with a solution no one thought about? Anything like that comes to mind?
That's somewhat of the opportunity to be and self-glorify myself, right?
No. Not sleeping, coming up with solutions. Let's learn from them.
The whole thing that we present is generally a solution, right? It's how do we help everyone get around whatever the issue is? We call it curative measure, right? It's like, do you hold money in escrow until certain things happen? What are the measures that we can put in place to close the deal today? And then we could still move on with some peace of mind with regards to the fact that the impediments that appeared at that point in time are being addressed and that it doesn't affect anybody's timeline, especially in commercial real estate. With specificity, I mean, with 5 attorneys, there's usually some level of addition in legal advice that we, provide. And look, we have to draw a line between giving legal advice as a title company, because technically you're not allowed to, but supplementing some of the thoughts with just a legal mind in general, right? And giving the legal aspect of title that we need to, get around. So nothing specific in terms of, and look, there's a lot of trust in estates matters that get a little hairy because, that's another indicator when we, especially in New York here, I've owned the property, it's been in the family for 150 years, like title is clean, like it's just been us. And that typically is a literal red flag of you definitely have title issues because the assumption is that it was passed on properly, and all the time it's not, right? Because especially if it's like 3 generations, there's something that appears that gets them off guard. And a lot of it is trust in estates. And we actually have a trust in estates attorney with us, right? That's now been, kind of refitted to be, a title attorney, but they have the trust in estates background. And in those instances, it's extremely helpful to be able to talk people through.
Real quick on that, because I was thinking they definitely don't have no idea what's being seen because they own it for so long, they don't see violations or they just don't care or it's been whatever. You're talking about actually being handed off correctly, papered, registered, like, grandma to dad. That's to right. Son. I didn't think of that.
Yeah, and then look, sometimes it's like a property is, given from a patriarch to 4 kids who now have 2 kids each, and you're talking about like 10 parties that need to be, reached out to and confirm that they're okay with the fact that it's being sold. I mean, it can become very complex. It just made me think when you said, is there any solutions that we present? I mean, we're always presenting solutions, right? And it's via things like that where we can bring in some expertise to get and help and assist with, certain situations like trust in estates or inheritance or so on and so forth that are particularly useful that some of our other competitors may not be able to, accommodate or present or provide.
Let's talk about just one quick thing around the market. The world's changed drastically, or at least here, over the last couple of years. I don't think interest rates are crazy. They're normal now, but a lot of people are freaking out. And if you have bridge loans and they're coming due and you got to refi at them and you can't, people are trying to figure out solutions, right? How have you guys been influenced over the last couple of years? Anything that, that has scared you, anything that you're excited about going forward? Just walk us through like the macro look from you guys' angle.
Yeah, look, from a macro perspective, we're directly tied to transactions. So do we directly care about interest rates where they are? Probably not, right? But what makes us care is that our clients care and means they're not transacting. And if they're not transacting, that's generally not good for us, right? In terms of a lot of the perception, I found this is kind of tied to mortgage rates. And you're right, which is that this is normal, right? Which means that the transaction volume for us, this is normal, right? When you look for us at a 10-year average, we're 1% below, right? So this is the norm. What I feel people want to be the norm and what they got used to actually being the norm while going through it was what was happening when the interest rates were as low as they were, right? Where that was the anomaly, which is that the interest rate environment was so low that everybody, we're getting 80%, like, banks were fighting with each other about giving money to guys like you, right? It's like, oh, we'll go 85 leverage or 90 leverage or
85% loan to cost.
That's what I'm saying, right? So, obviously those scenarios work to our favor. So we feel the same way, not just about how you feel about mortgage rates. These are normal. They're actually still historically low.
For sure.
Right. So if you look at the average of mortgage rates, it's still low. But my conclusion is that we feel this is a normal real estate environment.
Final question. Get out of title world. Dorian, as an entrepreneur, real estate guy, you get out of NYU and you put together 50K and you're putting together your first investment today with what's going on in the world. How do you invest your first 50K in real estate?
How do you invest your first 50K in real estate?
If you were to get out of college right now, you work really hard and you save 50K and you're like, I want to get into real estate now in 2025, how would you invest it?
Wow. Let's see. If I have 50K, I'm going to repeat it so that I can just put myself in the frame of mind. But if I have 50, I'm just straight out of college, I have 50K and I know I want to get into real estate.
Yeah.
Right?
Never done it. You don't come from it. Your family is not involved. Like, how do you, with your experience, putting yourself in those shoes, how would you invest your first 50K?
At the early stage of someone's career, even with 50K, right? It's all about surrounding yourself with people who are actually doing it. So you're going to come across a lot of people who say they're doing things when it's not really them. They may know Alex. I may be Alex's, best friend and confidant, but I'm not the one actually doing it, right? I'm not the one putting the deal together. I'm not the one
operating financing.
Right. Like I may have invested in you, but it's not the same, right? So you really want to get to know the guys like you that are actually doing it. And, the best way to do that, this is going to sound like a corny answer, but it's my first. It's, here in New York, at least, we have, institutions like NYU and Columbia and Fordham that have real estate programs. And you're not paying for the education there. Of course, you are paying to learn, but you're really paying to be amongst a room of people that are from either families or that are actually doing it and just want the extra education from a technical standpoint. And then you're going to be meeting the teachers as well, who typically are guys that are, performing in real estate. So that's the long road, right? To build a network and then have it be more sustainable. And I know that 50K is not probably going to go much at NYU and Columbia, but if you're asking the question more of, no, I want to put into the hard asset real estate, like what do I do with the 50K? And if you're going to kind of push me down that line of reasoning and providing an answer for, it's still okay. If you don't want to go to school, which I totally get, because I didn't really want to go to school, and God knows who does. It's surrounding yourself still with the people who are doing it, befriending them, getting to know them in a real way, and learning from them. And then, look, how many times have you heard somebody just take their fortune up front and find the deal themselves and be successful? It's not impossible, but probably not done it its most optimal way.
You got to get your ass kicked a little bit. It doesn't just work in the beginning.
That's what I mean. So how many times have we heard of the foreign entity coming into our, whether it's Florida or New York, it's like, oh yeah, we're gonna build it. We don't need a local team. We got the money. We got all the money in the world, and it fails, right? It fails more times than not. And my point is, even with 50K, you want to be alongside somebody who is actually doing it and who has done it, right? Learn from them and then do it on your own. And if you invest it right, so that 50K, I'm going to go to a guy like Alex that's buying multifamily. I'm going to be like, hey, I'm going to invest 50K in you. I want to learn from you. Let me shadow you. Let me help you. How can I help you can I work for you? I'm going to give you 50K and I'm going to work for you, right? And learn, and you're going to make money on that 50K because Alex always comes through, and then you're going to do it over and over again to the point where you're like, all right, I got the network, I got the wherewithal, and I have the track record. Like, let's try this on my own. That's the answer to that. That's how I would answer the question.
Love it. I would do the same thing. Dude, appreciate the time. Thank you for giving us knowledge about the thing that I hate. I hate insurance more, but I hate title almost as much. Right? But I really appreciate it.
Yeah, of course. Thank you for having me on the show. You're gonna have to be now on my show, but I just love the fact that we had the opportunity to catch up. We've been friends for years, but we haven't seen each other for a bit, so we got to change that. But at least for now, I get to see you virtually.
Hell yeah, that's my man. Thank you.